Good morning, good morning, good morning. Welcome to today's Morning Blast. It is Thursday, the 22nd of May, all day. Myself and Michael, as usual, will be giving a roundup of yesterday's market moving news, flow, pricing, and a preview of today's market moving news, flow, and pricing. Well, maybe not the news because we don't know that quite yet. But before we do, I'll get the legals out of the way. So, as usual, nothing discussed on this Spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed that of Mr. Michael Brown. And I will caveat this show by saying a couple of things. One, Zach I don't know what he's doing today, but he's not done the overnight news roundup, so that was left to me. So apologies if that's a bit shit. And also, before I forget, I am travelling to Croatia tomorrow, so no morning blast tomorrow. Michael, how are you, my dear friend?
Well, very good morning, Ryan. Good morning, everyone. I'm okay. The sun is out. It's the first day of the first test of the summer today, and
Oh, of course it
all
is,
is
yeah.
all is right in the world, apart from well, seemingly my colleagues slacking off. I'm alone at Pepperstone Towers this morning. You're
At,
buggering off on holiday. Zach is on a beach
at
somewhere. I
what
mean, it
point,
feels like I'm the only one doing any work
what,
round here.
at what point do you think this is more about you than us?
Well, do you know what? I cannot help it if I uphold standards that are so high they're impossible for you to meet, Ryan.
Well, on the pun side of things, you are dead right. I'll give you that. I've given up. When I was putting together the roundup, I was like, do you know what? I can't even be bothered to put in a witty like final story because just what's the point anymore? What's the point? I've given up, mate. Literally, I've been punned into submission. So I bow to your greater
Matron.
punnage. Oh, hello. But anyway, what's been occurring?
Indeed, let's crack on with things. Good morning, everybody. To be honest with you, everything was looking pretty calm yesterday until we had what was a pretty dismal 20-year auction out of the United States, and all of a sudden everyone started to throw a little bit of a tantrum. Before that, I think probably the most, well, I suppose interesting, certainly not exciting thing that happened for the majority of the day, certainly through the European session yesterday, was that Bloomberg went down for a couple of hours, which left everyone very, very lost indeed. And I felt like I'd had my left arm cut off. I didn't know what to
Well,
do with myself all
this is
morning.
this is why people should be using PIQ, right?
See, I only mentioned it so you could have a free advert,
Oh,
mate.
stop it.
Aren't I a great little
And do you know
co-host
what?
for you?
And also, I'm very much looking forward to the new mobile experience, which, touch wood, if Sarav's lurking in the background somewhere, he better pull his finger out because hopefully that's going live this weekend. And our new mobile site is the bollocks.
Well, there we go. Next time the terminal goes down, we all know where to go.
Exactly.
Besides those technological issues, as I said, it ended up being a risk-averse day yesterday. The S&P closing down by about 1.5%, the Nasdaq down by 1.3%. The S&P having its worst day since the 21st of April and its first back-to-back losses in a couple of weeks. And as I said, this came amid a continued sell-off and bear steepening of the Treasury curve, with 30-year yields rising 10 basis points to 5.07%, which is the highest level since November of 2023. And this was all in the aftermath of what was a relatively soft 20-year Treasury sale out of the United States, the auction tailing the when issued by 1.2 basis points, which is significant, but I would just contextualize this by saying that it's not actually unusual for the 20-year to tail quite significantly. It is by far and away the most unloved segment of the curve, and as I put out on Twitter last night,
Indeed.
even the bloke who decided that they should be reissuing the 20-year Treasury bond, my doppelganger Steve Mnuchin, has come out recently and said, I regret doing it because it's been so terribly received. So I think we
It
do
really
need a
is.
little bit of context around that.
Yeah.
But nonetheless, when the market is as concerned as it is at the moment about the state of fiscal affairs in the United States, I suppose sort of the straw that broke the camel's back springs to mind as an analogy.
Well, yeah, it's the ginger stepchild of the Treasury curve. Let's be quite honest about that. No
There we
offense to
go.
ginger people, but you need to be burnt. There you
Jesus Christ.
go. I'm joking. I'm joking. Straubs, if you're listening, I'm joking. I'm joking.
That's exactly who my mind first went
Oh
to.
God, what have I done? What have I done?
Oh dear. Right.
Quick, move on.
Ryan's going to find himself being burned on a stake now, but never mind. Away from
I'll
the
enjoy it.
Treasury complex, where that reaction was rather overblown, as we said, the dollar did trade broadly softer against most peers yesterday. The dollar index down by another 0.5% to a low around 99.50, although we have rebounded modestly this morning. All other G10s firmer against the greenback yesterday, with the euro north of 113.5. Cable briefly trading to fresh year-to-date highs at 134.70 in the aftermath of that hotter than expected CPI data yesterday morning. But again, those moves have faded overnight. And in fact, the euro just testing 113 to the downside as I speak, after what in news I'm sure will please Ryan, poorer than expected services and composite PMI data out of Germany. In
I've
terms,
literally, that's bizarre. I've literally just posted.
oh
I've
my
literally
word,
just
I've literally just seen that as well.
that
God,
that is that is phenomenal. But then you kind of, I am on form for anything that's negative Germany. I am going to post it. So it was quite short odds. Let's be honest.
also, if we're starting to think alike, then I'm getting very, very
Oh,
worried indeed.
yeah. I was just going to say I don't mind that, but you should be shitting yourself.
Yeah, I am. Moving swiftly on, in terms of other bits and bobs from yesterday, as I said, fundamental catalysts actually relatively thin on the ground. A story, though, for Tom Talks Cars. OpenAI, they're going to acquire Johnny Ive's AI startup in a deal worth $6.5 billion. They want to close this in the summer. Johnny Ive, for those who are unaware, is the chap who used to be the main design guru at Apple. He, designed the iPhone, designed the iPad, designed all the operating systems, all the rest of it. The reason why they are buying, OpenAI are buying this firm is because they want to create some AI-powered devices of their own, and they expect those to debut in 2026. Away from the tech sector and onto things that I know considerably more about, if we move to the fiscal outlook here in the UK, we had the latest borrowing figures this morning. The budget deficit standing at £20.2 billion in April, which is, to say the least, rather grim. It is the fourth highest April borrowing figure on record, and actually more importantly than that, it is the second highest April borrowing figure outside of the pandemic, which obviously skewed everything massively.
Yeah,
And I think even more concerningly than that is that actually, although we are talking about the second highest regular April borrowing figure on record, we actually saw government revenues rise by £5.5 billion this year compared to last April. So clearly the fiscal situation is not only a worry in the United States, but a worry globally. But don't worry, we have Rachel Reeves in charge, and I'm sure she has a
yes.
really solid plan to sort
Oh
everything
God.
out. Uh,
Oh God.
Moving on from that, banking news this morning, ING, they are said to be looking at exploring the possibility of acquiring a US banking license for themselves. This would enable them to boost their access to US dollar liquidity and accept corporate deposits in the United States. But, of course, the flip side of that is it would require much, much tighter supervision from US regulators, although they are currently engaging with the Fed on that possibility. And last thing from me this morning, actually, as I said, Catalyst relatively light. We had reports via Bloomberg sources citing delegates probably about an hour ago now. OPEC Plus, they are reportedly
Yes.
discussing another jumbo output hike in July of 411,000 barrels per day. That would be the third straight month where they've raised output by that margin. We see crude benchmarks trading down by around about 1.5% on the news, although it's not entirely surprising because I think we have had sources reports alluding to
Yeah.
this for quite some time. Essentially what we're seeing here is the Saudis getting incredibly annoyed at the lack of compliance among certain OPEC plus countries. And I think one of the reports, I think it was via Reuters a few weeks ago, basically said if compliance doesn't improve, then we are just going to unwind all of the 2.2 million barrel per
Yeah.
day, quote unquote, voluntary cuts in clips of 411,000 to get back to zero by October, November time. So it certainly looks like
Yeah.
that is
But this is
the
it.
trajectory we're following there.
And as me and you've mentioned a few times, this is the Saudis just doing Operation Market Share. That's all they're caring about at the moment. They're saying, "Look, well, look,
Mm,
if no one else is playing ball, fuck them. We're just going to pump and try and get as much market share off you as possible." And they've been doing this
yeah.
not just not just angled at their own internal OPEC Plus members, which, let's be honest, OPEC Plus is falling apart at the moment, has been for a long time. Well, OPEC in general, and they're losing global market share. But they're also doing this to try and counter the US production growth and the market share that they're obtaining. So it's an interesting one to watch because not you can look at it and say, well, why are they doing that? They're shooting themselves in the foot because they're getting lower revenues. But at this stage, they're like, yeah, and they have, in actual fact, Saudis came out a few month or so ago, and we mentioned it on the show, that the Saudis actually came out and said, look, we've done some investigating, we've asked the right people within the country, within the kingdom, and we're happy for lower prices for longer. As soon as
Yeah.
they say that, that is not what you want to hear if you're an oil bull, because it means they're in it for the long term. But anyway, moving on. So as I said before, thank you for that, Michael. As I said before, Zach didn't curate the overnight news roundup, so bear with me. It could all fall apart and go tits up, but I'll try my best. So starting with trade, US-China tariff truce could save heavy machinery firms such as Komatsu, drastic amount, hundreds of millions due to easing cost pressures and ongoing trade talks. G7 finance leaders are downplaying tariff disputes. They seek trade consensus. G7 nations meeting in Canada aim to stabilise global trade amid Trump's tariff threats, prioritising cooperation over conflict. And quite an interesting one on here, because we did hear from the US before the G7 meeting that the US had no interest in talking trade. And from the sounds of it, the US haven't. But then we've got, I saw a German policymaker today or late last night come out and say, "Oh, we've had some good vibes from the US." I get the impression that he's saying that more for his benefit than actually he did have good vibes from the US. You don't really want to come away from this and saying, "Oh, yeah, to be honest, the US wouldn't even talk to us." So an
No, I
interesting
think he's
one.
very much playing to a domestic audience with that
Yeah,
one.
exactly that, exactly that. So yeah, unless we hear anything from the US, I would take any other policymakers from other countries, any of their comments with a pinch of salt, to be honest. Canada touts deep US trade ties in talks with Treasuries Besant. Canadian officials emphasise economic integration to secure favourable tariff terms as US trade policies tighten. US and Japan agreed dollar-yen rate reflects fundamentals and easing tensions. The finance chiefs are aligned on currency stability, reducing fears of intervention as trade talks loom. As we know, this is one of those non-tariff barriers that the US wants to kind of focus on, I guess. Vietnam, they're pushing for more US tariff talks to avoid economic hit. Vietnam seeks to mitigate Trump's tariff impact, critical for its export-driven economy, for extended negotiations. Myself and Michael have noted a few times that Vietnam are kind of in a bit of a bad position here, because not only have they been lumbered with very high tariffs, but they've also got no trade deal. So they had all the downside and none of the upside that China had. So
Mm.
again, you got to think of the dong at this point. There you go. EU
Jesus
eyes
Christ.
EU eyes lobster deal extension in broader Trump tariff package. The EU explores trade concessions to soften US tariff blows, leveraging existing agreements like lobster exports and make it snappy. 12 US states sue to block Trump's blank check tariffs. States challenge Trump's emergency tariff powers, arguing overstep authority and harming local economies. In macro news, Trump's tax bill surges forward. House vote looms after key hurdle is cleared. The bill, advancing despite spending cut disputes, could add trillions to US debt, raising fiscal concerns. Obviously, that's something that's in vogue at the moment. US stocks tumble as Treasury yields spike on debt fears. Investor jitters over Trump's tax plan swell US downgrade projections, pushing yields up and markets down. That's according to Reuters. JP Morgan's Diamond warns of US stagflation risks amid policy shifts. Diamond's caution reflects fears that Trump's tariffs and tax cuts could spark inflation without growth. Yep, that would be the definition of stagflation. Well done.
Thanks for that. Yeah.
Bank of sorry, Mr. Diamond. Bank of Japan policymakers resist bond yield intervention unless rout worsens. Japan's central bank holds firm on tapering despite record high yields, signalling market unease. Yeah, I've just scanned when I woke up. I scanned through the PIQ feed, and there was a lot of headlines about record yields in Japan, so I want to keep an eye on. UK public finances reveal larger than expected April deficit. Rising deficits complicate Chancellor Reeve's fiscal plans, potentially necessitating tax hikes or spending cuts. I'm going to guess
That's-
both. Yeah, there we go. I'm
well,
glad we're on the
I
same
was going
page
to
there.
say, I think there's an issue with that story because you're assuming that there actually is a fiscal plan.
Well, this is it. If I'm sure they're willing to accept answers on a postcard if you want to send them to the Treasury Department.
I'll
Um,
wander down later.
Yeah, why not? Singapore faces technical recession risk after Q1 GDP contraction. A 3.9 Q1 growth masks underlying weakness, raising concerns about a potential economic downturn. Let's start again. Sri Lanka's central bank cuts rates by 25 basis points to spur growth. The surprise move aims to boost a recovering economy amid global trade and tariff uncertainties. Finally, on macro, Japan's factory activity contracts for the 11th straight month, PMI data shows. Persistent manufacturing weakness driven by Trump's tariffs cloud Japan's economic recovery prospects. Actually, one more because it did land just before we came on air. Obviously, we have France's PMI signals the ninth month of private sector contraction on the bounce. Sacre bleu. Geopolitics. Geopolitics. Russia's downed 105 Ukrainian drones, including 35 over Moscow. That's according to the mayor of Moscow, I believe that was. That's going to be one of the largest Ukrainian drone attacks since the start of the war, as escalating tensions ahead of Trump-Putin ceasefire talks. Two Israeli embassy staffers were killed in Washington, D.C. shooting, suspect detained. The rare attack on the diplomatic personnel heightens US-Israel security concerns amid regional tensions. Everyone's favourite Asian dictator, North Korea's Kim Jong-un, slams warship accident as criminal, signals a, quote, purge. So for those that missed it, there was like a 5,000-ton warship that North Korea were launching, and it was, Kim Jong-un was there. It was all going to be like a load of fanfare, and it had a bit of an accident. Kim's half
Well,
was
you
gone.
you say I was going to say you say a bit of an accident. The front of it fell off.
Do you know what? I've not actually seen it, so so that's even better.
I've not seen a
Yeah.
picture of it, but apparently the front of the ship just fell off as it was going down the ramp.
Well, I think they need to speak to our friend Martin. He's in the welding game. Maybe he can send some welders over if they can spare him from Hinkley Point Nuclear Power Station. That is. But yeah, not a good time to be in in the Navy in North Korea. Well, I suppose is there
Don't
any?
start singing, please.
Oh, sorry. I'm so lonely. Kim's harsh response to the naval accident underscores internal pressures and military scrutiny. I would say the wheels have fallen off, but ships don't have wheels, so
It's just
I
become
think.
rudderless, hasn't it?
Oh, there we go.
There we
God.
go.
Right, where was I? UK to cede the Chagos Island sovereignty to Mauritius in landmark deal. The agreement resolves decades-long dispute
No, they're
between
not.
two. What do you mean?
Well, since you sent your news roundup, the High Court have said that the government can't sign it today.
Are you joking? Oh,
Nope.
fuck's sake, what a carve up. All right, ignore that then.
3 a.m. they broke that news.
Oh God. Israel intercepts missiles from Yemen, escalating regional flashpoints. The interception follows heightened Houthi activity, complicating Middle East stability efforts. In equities, before I move back to Michael, Lenovo's Q4 profit plunges 64%, hit by weak demand and trade tensions. The China tech giant struggles as PC sales falter and US tariff dispute supply chains. Xiaomi's new electric SUV set to launch in July, boosting EV ambitions. The Chinese tech firm ramps up its EV push to compete in a crowded, tariff-impacted market. Walmart, they're planning to cut 1,500 jobs to streamline operations and lower costs. The retail giant restructures to counter rising expenses and economic uncertainty. I'll tell you what, if you had a beer for every time you've heard uncertainty recently, you'd be constantly pissed. Almost as bad as Michael Brown.
Whoa.
Nike to hike prices and return to Amazon sales. Media reports say the move aims to offset tariff costs and recapture online market share in a competitive retail landscape. AT&T, they're to acquire Lumen's consumer fiber business for $5.75 billion. The deal strengthens AT&T's broadband footprint, capitalizing on growing demand for high-speed internet. Nestle, they're refocusing on core businesses. I'm guessing that means Easter eggs and chocolate. CEO signals strategic overhaul. The food giant aims to streamline operations amid global economic pressures and shifting consumer trends. And finally, for me, Zoom raises its annual forecast fueled by robust AI-driven demand. Strong enterprise adoption of AI-enhanced video tools drives Zoom optimistic outlook. I'm going to be, there's no pun here, but I get the feeling that's a load of waffle from their CEO because, why do you need AI and Zoom? It just makes no sense. And also, Zoom's shit. But anyway, that's it from me. Back to you in the studio.
There we go. Ryan's product review. Zoom is shit.
There you go.
Right. In terms of today,
Tomorrow,
then.
I will be reviewing.
Oh, God. Right. In terms of today, then, it is, of course, PMI day. We've had that mixed bag of data out of France and Germany already, and in about 10 minutes' time, at the top of the hour, we get the Eurozone-wide figures. Not going to run through them all. Ultimately, we're
Thank
expecting
God
a
for that.
marginal uptick in the overall composite output metric to 50.6 from a prior 50.4. Also at the top top of the hour, we get the latest IFO sentiment surveys out of Germany. The headline business climate metric that is expected to have risen to 87.3 in the May survey, up from a prior 86.9. Half an hour later, at 9:30 this morning, we have the latest flash PMI figures out of the UK. Also expecting a marginal improvement in the data compared to where we were in April, but the overall composite output gauge expected to remain in contractionary territory at 49.3 from a prior 48.5. Moving into the afternoon at 12:30, we get the minutes from the April ECB meeting, which are probably going to contain absolutely nothing of any interest whatsoever if they're in keeping with the usual form. Into the US session at 1:30, we have activity data from the Chicago Fed, and we also get the weekly jobless claims data, where the initial claims print coincides with the May non-farm payrolls survey week. Initial claims expected at 230,000, broadly unchanged from the prior 229,000. Into the remainder of the US session, we get the latest S&P flash PMIs out of the States at 3:15 this afternoon London time, with both the manufacturing and the services metrics expected to have ticked up modestly from the April prints, while at 3 o'clock this afternoon out of the States, we get the latest existing home sales data, which is expected at 4.1 million, up from a prior 4.02 million, and this data, of course, referencing April. In terms of other things worth mentioning this morning, we do have plenty of speakers on the docket, including the Fed's Williams and Barkin, the ECB's de Guindos, Escriva, Elderson, Nagel and Vujic, as well as the BOE chief economist Hugh Pill and Uber Dovish MPC member Dingra. Earnings today come from workday after the close. There's really nothing of any note before the market open. And given that Ryan is going to be swanning around on holiday tomorrow, I may as well just mention a few things about Friday as well. We do get the latest retail sales figures from the UK and from Canada. We also get new home sales data out of the United States. And of course, do bear in mind that Monday is a public holiday, both here in the UK and also in the United States. It is Memorial Day. And in light of that, we will have an early close for cash Treasuries, which will close at 2 o'clock Eastern time tomorrow afternoon, 7 o'clock tomorrow evening here in London. So do just bear that in mind. And also bear in mind, of course, that given that we have a long weekend on both sides of the Atlantic coming up, trade is likely to become like my hair relatively early tomorrow afternoon. And what do I mean by
Thin
that?
and wispy.
Very, very thin indeed. And for the time being, and I guess until Tuesday, that is your lot from me.
Do you know what? I forgot it was bank holiday on Monday, which is good because the wedding I'm going to in Croatia is on a Sunday, and I will be in no fit state to do a blast on Monday morning.
Someone has invited you to their wedding. God,
Yeah,
Jesus, they're brave.
I'm page boy.
The page boy's
God,
probably taller than you.
Well, this is it. Not many. Right, Michael, thank you so much. Listeners, thank you so much as always for tuning in. We do really appreciate you, and especially all your good feedback. To be honest, we've not had any bad feedback, so keep that to yourself.
Yeah, I was just going to say, we don't want that. You know,
no, exactly.
If you don't like what we have to say, just go and listen to something else for half an hour.
Yeah, exactly. Put on Spotify or some shit like that. But Michael, thank you as always, my dear friend. Listeners, thank you as always. And yeah, whatever you're doing, keep it tight. Stay safe. Remember to factor in the fuckery, and we'll see you on Tuesday. Much love.
Bye-bye.